This video will walk you through a statement of cash flows problem. We're going to only focus on the investing section of the statement of cash flows using the indirect method. The problem that you've got available to you looks something like this. You're given an income statement and a balance sheet, given two comparative years here and some additional information, and from this we're asked to prepare the investing and financing section of the statement of cash flows. So I've started to frame out for you right here the statement of cash flows, and of course above all of this you'd have the operating activities, but we're only looking at the investing activities, so we'd start by saying we have cash flows from investing activities. We'd have a good header there and everything, and you come back to here and you start pulling your information that you need to fill in that section of the statement of cash flows. So the thing I'm going to do here for you is just highlight, because there's so much data here, we need to narrow in on what it is we're looking at to complete this section of the statement of cash flows. So I thought I would just highlight it in yellow here for you so you can see these are the items when we're dealing with the investing activities section, and these are typically what we consider fixed asset. Long-term assets are what show through in the investing section of the statement of cash flows. So the thing we're going to do is we're going to look from the beginning of the year, which would be this column, and then we would see what changes we have till the end of the year in this column. So we'll just start with investments here, and what I've done, actually the best way for me to kind of illustrate what's going on here is I've created a little T account here for each account that we're going to analyze. And if I look at investments, I'm just going to go and I'm going to pull off what does the balance sheet say, and the balance sheet says we started with $84,700, and then it tells me that we ended with $35,700. So this is the ending balance. Here's the beginning balance. And so logic would tell you that the value went down in my investments. But we can't just make the assumption. We're trying to get the cash flow from this change. How much cash actually flowed in or out of the business because of this change right here. So we could have sold some investments. That could have been one way we got down to this number. Or we could have also purchased some investments. So let's go back and look, and we can't get that data right from the balance sheet. That's why we're given additional information down here. And so I'm going to look for something that talks about investments. So it says land cost. This is land, mortgage, nothing on investments. There's nothing here on investments in the additional information. Now let's look at the income statement, see if that shows us anything. And what you'll see is right up here we have a gain on sale of investments. So what that tells me is that I did indeed sell investments, and so the investments went down by $49,000. But what this number represents is the cost, and not necessarily the cash that flowed. And we want to get on the statement of cash flow all the cash that flowed from this change in the account right here. But this is just my cost. So when I sold this investment, I received more cash than this actually, and the reason I know that is because I had a gain of $11,000. So what I'm able to pull out of here is that I had the cost went down by $49,000, but I had a gain which adds to the $49,000 of $11,000. So I would say something like this. I would say cash received from the sale of, and let's just go like this for now, investments. And I know that I got $60,000. Again, the reason I know that I have $60,000 is because I have to deal with the gain here, this $11,000 gain, which doesn't show through just in this, the change in the account doesn't show the gain. So that's how I pick out the investment section for the long-term investment. So this one's done. Let's look at the land. Notice my land went from $90,000 to $75,000, and let's just go back and also plug this in so you can kind of see how my mind's working here and figuring out what's going on. We started at $90,000 and we ended at $75,000, and realize that this represents the cost, not necessarily the cash that flowed. So let's go back here and look to see if there's, I want to know, did my land change because it went down? Did it also go up? I want to know the net cash flow. So I have to look at other pieces of information, and look at what I'm told right here. Land costing $15,000 was sold for $15,000. So this statement right here tells me there's no gain and there's no loss. The cost was 15 and I got 15,000 for it. So no gain, no loss. There'd be no gain or loss on the income statement, but the $15,000 is the amount of cash that flowed, which tells me this is the $15,000. So I also have cash received. That's an inflow. If I sell something, then I have another inflow of $15,000. So those are the cash inflows so far. We've dealt with now investment and land. Let's look at our building, and now our building also changed. The building, let's go back and just plug it into the account so we're consistent in how we're analyzing this. We started with $260,000 and we ended with whatever the balance sheet says, which is $375,000. So that tells me that it increased, and so that typically means we purchased something. We increase our building by buying more buildings. However, we can buy buildings in a number of ways. I can pay cash for it. I can just issue a note and not have any cash come in. I could trade stock. So we have to figure out, did cash flow because of the change here? Look what happened here. A mortgage note was issued. That'd be a financing transaction. This says a building costing $115,000 was constructed. So let's see if that's the difference between the two. Oops. $115,000. So what that tells me is this change represents the building that was constructed, and to construct a building I have to pay for it with cash unless I'm told otherwise, and there's nothing in here to indicate that it wasn't purchased with cash. So before we move on to have the total, we should total this. Let me just change this a little bit here. And so I would have, I'll just do some formatting here so you can see maybe proper format would show me now. I'm going to cluster all of the inflows together, which are both of those. I'll subtotal them right here, and right below it I'm going to take care of any outflows. So less cash, we'll say just we had cash paid, right? So paid for construction of new building. So I'm going to have cash leave the organization in the amount of $115,000. That's how much cash I had to pay to increase my building account. So this is a cash inflow. This is a cash outflow. I'll just make it negative so that it makes more sense here. So that's my cash outflow. I'm going to go back here. I've dealt with investments, land, buildings, accumulated depreciation. We took care of that in the operating activity section. Let's look at our machinery and equipment. Doesn't look like it changed. It stayed the same from the beginning to the end of the year. There's nothing else listed down here that would note otherwise, that there was any cash flow from this line item. The accumulated depreciation, again, is the operating section, and look at this thing called patents. A patent is an intangible asset. The value changed. It went from $65,000 and it ended at $58,000. So let's do our little, well, I don't have one of these created for patents, so let's just talk about it. So the value went down. It went down by $7,000 with an intangible asset. We actually, as we amortize it, which is also another way to say we're depreciating it, it went down by $7,000. This would also be added to the operating section of the statement of cash flows. So we started with $65,000, went down to $58,000. That was only because we amortized it, not because we bought a new patent or sold any form of a patent. So there's no cash flow from this item as well. So we've dealt with all of the items in the investing section of the statement of cash flows. And so the section here, which is the investing section, would end looking, something like this. So we would say net cash, and so we would say net cash flow, I guess you could call it, used for investing activities. And I would add both of those or subtract, and you'll notice since I said used, I was right, because we had a negative $40,000. We had a $40,000 outflow in total instead of any inflow. So that's a tough one, trying to work through and analyze each of the changes and figuring out what is the actual cash flow instead of the cost flow. And our goal with the statement of cash flows is to get the right cash coming in and the right cash going out because of the investing activities. So this is the end of the investing activity section for the statement of cash flows.